watch it multiply, or get delisted and turned into dust. But for some, years are far too long to wait. Traders want their money today and throw thousands of dollars into stocks, forex, and options to get it. On one side, you've got the retail traders, usually trading on the side of their main job. These guys are normally pretty sensible, clued up, and use a detailed series of charts and strategies to predict where stocks are headed. Then you've got the professionals, the institutional traders and bankers who have spent years studying markets and have access to Bloomberg terminals, walls of monitors, and millions of dollars. They spend hours charting and write full essays of due diligence before even thinking about going in. Cunning, careful, and calculated. Then there are the other traders.
Mentions of Microsoft's ticker on a popular subreddit that's dedicated to markets.
It's discovered on Reddit. You can think of this similar to a sort of video game hack.
You put down a little bit of a deposit on margin, and then you get infinite leverage.
Getting people to take more risk than they want to. Here's what these kids are doing, and they're psychopaths.
Wall Street bets. By turning stock options from a hedging strategy into a glorified Betfred, people on the subreddit have managed to convert the entire stock market into their very own personal casino. Add that to zero commission brokerage apps available to everyone with a mobile phone, lock everyone in their house for months on end, and you've got an ungodly amount of people on board. The process is simple. You start your career by signing up to Robinhood, a zero-commission online brokerage, infamous for being absolutely terrible and breaking constantly. Oh, lost $20,000 because of a problem on our end? Here's $75 compensation. Despite its problems, it's still far better than Questrade. Robinhood's the bottom of the barrel of brokers, and as such, usually attracts likewise traders. But it just about works. Once you've signed up, it's usually best to read up on trading terms so you have a shred of an idea of what you're doing, but this stage is completely optional. Once you're on Robinhood, you're set. It's time to lose money. This usually starts by logging on to Wall Street Bets. The subreddit itself is home to a few things: bull posts, bear posts, gains, losses, but mainly, it's a bunch of shit posts and memes. Useful stock tips and actual thorough due diligence can occasionally be found, however. Once located, and after skim reading a few lines of it and glancing at some charts you've pretended to understand, it's time to go all in. The YOLO, the subreddit's signature move. Essentially, an investment of all of the cash in your account. Once the cash is on hand, it's time to suit up. The weapon of choice almost always being options on SPY, a fund that tracks the overall US market. What are stock options? Basically, an option to buy or sell a stock at a specified price. When you're buying a call option, you're basically paying a premium up front to bet that the value of a stock will rise to a certain price by a certain date. The further the price goes beyond your selected strike price, the more your call's worth. But if it doesn't hit your strike price by the expiry date, you're not paying this month's rent. Puts are the same thing, but they're generally for when you think stocks are going to fall. If an option hits your strike price or more, you can exercise them to buy or sell the shares, or sell the options on at any time before the expiry. Now, the nature of options allow for a huge potential and upside, banking numerous people up to 10 times their investment, but also losing others all of it. There have been a few tragic losses, but even for those that lose everything on Wall Street Bets, there's almost always another portion of Grandma's pension up for grabs to head straight back in. It's 2012, and after being exiled from r/investing for constantly pumping risky trading ideas, Reddit user u/Jartek decides to make a subreddit of his own, and on January 31st, Wall Street Bets goes live. It's not long before the subreddit adopts a 4chan-like etiquette of calling each other retards and autists, and casual mentions of cockholdry everywhere. It's also not long before people on the subreddit start playing around with options and penny stocks. The trades start out pretty tame, but this doesn't last for long. It's also worth mentioning that everyone on the subreddit was relatively competent with stocks and had some idea of what they were doing. Until 2015, around the time when Robinhood starts to gain some traction. From there, it's not long before they find Wall Street Bets. The subreddit hits 10,000 members, and the slow influx of Robinhood traders begins. Naturally, the quality of posts on the subreddit take a hit. In late 2016, this influx only accelerates as Wall Street Bets starts to leak onto r/all, growing the sub to around 50k by mid-year. By this point, many of the original members had had enough and left the subreddit for good. Numerous events unfold over the next few years, with users like Wall Street Bets God appearing, claiming to have made $8 million from 43,000. Someone makes $110,000 completely by accident. Martin Shkreli becomes a mod. But by 2019, the sub had grown to 700,000 members, and the autism was cranked up to 100. It's mid-January 2019, and Reddit user RAINMAN decides to stray from the subreddit's proven strategies. He's still trading options, but this wasn't your usual options trade. This was a box spread.
Goat Fund Trader is offering you capital up to $800K. You can go on our website and check all the challenge rules. Our platform has the best conditions like first payout on demand, the smallest prices for the Goat Challenge, no time limit.
Options, but this wasn't your usual options trade. This was a box spread, a highly complicated strategy that involved both buying and selling equal amounts of options at the same expiry and strike price, and profiting by taking advantage of pricing inefficiencies. Box spreads are generally not very profitable, and the commission charges slapped on top of them usually make them not even worth bothering with. But RAINMAN was on Robinhood, and Robinhood doesn't have commission charges. Bingo. Time to go in. Now RAINMAN only has $5,000 in his account, but by trading these box spreads, he manages to take on around $300,000 worth of margin. That's a leverage of 60 to 1. Now obviously, this should not be possible, but RAINMAN's strategy was so autistic that not even Robinhood's risk management knew it could be done. He'd also worked out that the box spreads were completely risk-free, meaning he had no money at risk. If those options remained unexercised, in 2 years, he'd make around $40,000. He goes on Wall Street Bets and shows everyone the results. Immediately realizing the inherent risk, people tell him not to go through with it, that there was risk involved, that he was completely retarded. But RAINMAN had run the maths. He had no money at risk. It literally could not go tits up. Until people started exercising them. See, RAINMAN thought this, he could exercise a call he purchased, meaning a loss of only $500 per spread. But here's the thing, he sold 500 spreads. On the same day he opened the spreads, buyers began exercising them. So many in fact, that RAINMAN had to close 283 spreads in one day. Naturally, his margin called for a shit ton of money he doesn't even have. $60,000 down and minus 2,000% later, Robinhood actually realised what was going on and closed RAINMAN's account instantly. Box spreads were removed from the platform in a matter of hours. So overall, not a great week for RAINMAN. But it turned out that before things went tits up, RAINMAN withdrew $10,000 of the initial profit from his Robinhood account, meaning that while losing Robinhood at least $60,000 and changing a major investment platform's rules further, RAINMAN had actually doubled his money. Before we go on, browsing. It's important. We do it pretty much every day. But what if people could see what we browse, down to every last detail? Well, your internet service provider can, as well as any hacker sharing an unsecured internet connection with your device. All your precious info, gone instantly. Enter NordVPN. NordVPN encrypts your data at the source, meaning those spying eyes don't have a chance. It's simple. They give you a map, you click a country, and you're off the grid instantly. Australia, Italy, Mexico. Your internet could be anywhere. If you don't know, how will they? Unlimited bandwidth, super fast service. It even works on 6 of your devices at once. And NordVPN is 68% off using the link in the description. That's $3.71 a month, plus a month free. 19-year-old student Anal Farmer 2 starts out on Wall Street Bets in 2018. His first post suggests he's new to trading, asking where he should YOLO his 5k, how not to be so retarded, and so on. Fast forward to July 2019, and he's a grizzled veteran. He's now got around $100,000 in his Robinhood account, and he goes all in with it on short-term expiry calls on a company called Align Technologies. It goes well, and a day later, he bags $200,000 profit. 2 days later, he heads back in. The market had gone up yesterday, so logically, tomorrow it was going to drop. He then YOLOs 170k on 0-day expiry SPY puts. These puts expire the next day, so naturally, they're high risk, high reward. On the same day he buys them, a rogue tweet from Donald Trump announcing a new wave of Chinese tariffs causes the market to nosedive, and he bags another 300k, making his account worth almost $700,000. Confident a market rally was on the cards for the day after, Anal Farmer 2 then put 600k of the profit he'd just made into another round of 0-day expiry options for tomorrow, but this time there were calls. He goes to bed. But when he wakes up, it's a hellscape, a sea of red. The market was down hard again, and his $600,000 was snapped out of existence instantly. He sold the calls on for 100k, leaving around 200k in his account. It was okay. He could make that 500k back with a few careful and strategic. Fast forward a week and it's down to $40,000. An investment of rope was tempting, but Anal Farmer 2 wasn't done just yet. Alright, one final YOLO. Just need to find the right stock. Perfect. He spots an August 14th earnings report for Canopy Growth Corp and to put the entirety of his account.
Trading is not for everyone, but if you are a trader, plus 500 is the place for you. Forex.com, the #1 Forex broker in the U.S. Part of
the entirety of his account on calls for it. He goes to bed. August 13th, one day before earnings. Anal Farmer 2 is currently up 8k. Things are looking good. He goes to bed again. He wakes up the next day again to a sea of red. Earnings was a complete disaster. However, Anal Farmer 2 is not selling for a loss and plans on sticking with the calls till the end. It's generally assumed that he lost the rest of his account that week. Having made and lost $700,000 in 3 weeks, Anal Farmer 2 decides to take a break from Wall Street Bets and hasn't been back much since. A couple of months later, and a guy called Control the Narrative goes in. Straight off the bat, he borrows money via leverage through Robinhood and loses $30,000 on options. He makes a Reddit post declaring the end to his trading career, and that was the end of it. Until he came back 3 days later, $1,000. But there's a twist. Turns out there's on Robinhood, and it gives you infinite leverage. Multiple others use this glitch to borrow money in the millions, but Control the Narrative is sensible. He only borrows enough to meet his personal risk tolerance. $50,000. The loophole worked by applying for 2-to-1 leverage via Robinhood Gold, a monthly subscription service which requires a minimum of $2,000 in your account. Check. Because he has 2-to-1 leverage, he now has $4,000 buying power. Control the Narrative then buys 100 shares of AMD stock. He pays $3,200 for the shares, with almost half of that being leverage. He then goes to Robinhood's option market and sells AMD calls, turning over his 100 shares and receiving a premium of $3,200. He'd essentially laundered the leverage Robinhood had given him access to into a tangible cash balance in his account. And since he has Robinhood Gold, and his leverage is 2-to-1, he now has access to $8,000. Rinse and repeat until he hits $50,000, his personal risk tolerance. He then bets every single penny of that on Apple puts days before an earnings report, expecting bad news. Earnings day finally arrives and Tim Apple smiles as he uploads Apple's quarterly financials. Christ, they'd smashed it. Control the Narrative loses 25 times his entire account in an instant, prompting his soul to leave his body live on camera. Loophole was fixed. Robinhood would then go on to Wall Street Bets to clarify their policies on margin and state that anyone found abusing systems on Robinhood would have their account closed. They were banned from the subreddit instantly. But while Wall Street Bets was busy spreading the ashes of control the narrative, a few bears had spotted something brewing on the horizon. February 2020. The Dow Jones Index is riding at an all-time high, and Wall Street Bets now has almost 900,000 members. At the same time, things were happening in China. They weren't good. A new coronavirus was springing up all over Wuhan, and it was spreading fast. China locked down the city and told everyone that everything was just fine. Turns out, it wasn't. Fast forward a few months, and almost the entire world has it, and it's still spreading. After infections start springing up in Europe and America, governments cave in one by one. All right, boys, time to close shop. Bears on Wall Street Bets had struck it big, and while infections continued to spread, bears were rubbing their hands together. These puts were going to print nicely. And they did. In March, the US market fell by almost 30 years. Bears were certain the worst was yet to come, so the mission was simple. Load back up on puts and head straight back in. COVID was getting worse, rent wasn't being paid, and unemployment numbers were skyrocketing. Once again, it literally could not go tits up. They hadn't taken into account one thing, however. A booming market was Trump's golden ticket to a re-election in 2020, and he wasn't just going to let it slip into the gutter. And so began the pump. The head of the Federal Reserve, Jerome Powell, is tasked with keeping the stock market afloat, a feat that seemed almost impossible under the current circumstances. But then something incredible happened. By pressing a simple button, Jerome Powell discovered something fascinating. A real-life infinite money glitch, one that was yet to be patched. Turned out that the Fed has a money printer, and it printed money. The recession was cancelled instantly. In late February, the US government had pledged $2.5 billion to fight the coronavirus, but by mid-April, they'd burned through more than $6 trillion. The Fed pledged a $2 trillion stimulus package, as well as announcing unlimited purchasing of government bonds. Emergency tender packages of $1,200 were also deployed. The results were incredible. 40 million unemployed. The market's up. 100,000 dead worldwide. Priced in. Almost $1 trillion added to the national deficit in 1 month. SPY 300. By simply taping the print button down, Jay Powell had ended the crash instantly, and the world's financial system was back to normal for good. And thank God for us, excessively printing money to counterbalance economic issues has never had unintended consequences. Bears were absolutely brutalized. Tens of thousands of puts, reduced to ash instantly. People on the subreddit would continue to remain bearish for a couple of months, but as things worsened, and the market kept rising, one by one, they fell. By late May, it was over. Even with 40 million Americans unemployed, the Nasdaq had surpassed even the pre-crash peaks of late 2019. The Dow Jones Index wasn't far behind. The bears had lost. It had been a rocky few months for the world in general, but things were finally improving. The economy had made a full recovery, the virus had completely gone, and the world was back to normal.
With your IRA account, you have 2 paths to grow your money. You can take control.
Sponsored by NordVPN.
On Wall Street this past week, plenty of chaos, led by something called Wall Street Bets, a popular, foul-mouthed Reddit page.
These next-generation investors have sent the financial world into an absolute frenzy.
And decided to buy stock in a company called GameStop.
Traders encouraging each other to push shares higher and squeeze out short sellers.
Going after the people I despise the most on Wall Street.
So they decided, we're going to buy GameStop. We're going to fuck their whole system up. And it was all because of these guys.
Late 2020. It's now almost a year into the coronavirus, and people have been locked in their homes for months on end. Stocks are still fiery hot, and everyone in the first world now makes their living trading them. It had been a bit bumpy, but the market continues its moon mission. Now, the money printer had been dialed down for a while now, but at this point, its job was done. So many attendees had been acquired trading stocks that the smell of grease had emanated to every corner of the internet. Instagram, Facebook, even TikTok. Zoomers were fascinated. The stock market? Wasn't that a thing for boomers in New York? Well, no. Turned out that anyone anywhere could sign up and trade. Look, even their favourite Twitch streamers are doing it. It was clear. It was literally free money. So people jump in droves. So many people that platforms like Robinhood and Trading212 see millions of users sign up in just a few months. However, when these new traders sign up, they have an issue. They don't know anything about actually trading stocks. So they scour the internet for some advice. They dig through stock tweets, trading Discord servers, Yahoo Finance comment sections. No sign of intelligence anywhere. But eventually, one by one, they find themselves on a web forum. Blown up Robinhood accounts and half-eaten crayons are strewn across the floor. Wolf of Wall Street scenes and trading memes hang from the walls. The stench of chicken tenders roams so potent, their nostril hair dissolves instantly. Wall Street Bets, a subreddit full of degenerate gamblers, apes, and a sea of self-proclaimed autists and retards, all losing so much money trading stocks, not even their wives' boyfriends could bail them out. My God. Its reputation in early 2020 was ghastly, and most that stumbled upon the forum recoiled in disgust before turning away and never looking back. However, for those that stayed, 2021 would change everything. Early 2019, Reddit user u/deep-fucking-value looks at his savings account. It looks pretty healthy. So naturally, he looks to YOLO it all on a single stock. He spends weeks digging through articles and posts, but eventually, he finds a stock he likes. GameStop. Wait, GameStop? The place you went to trade your games in for a fraction of the price you paid for them. The same place that sells a physical of a product that's being downloaded online 80% of the time. The place losing more than $500 million a year. Okay. That didn't sound like the best investment. But Deep Fucking Value's done a bit more research than your average bloke, and it looked like they were actually turning their business around. Turns out that at some point, they must have realised that selling hard copies of video games probably wasn't the thing to focus on in 2019, and started focusing on online retail and merchandise instead. Look at all the ponies! Also, the next generation of gaming consoles was just round the corner, which meant only one thing. Trading at $5 a share, meaning a valuation of just $350